John, welcome to you. Let's start with what could kind of constrain the growth story. What do you see?
Yeah, I think they're going to report very strong earnings, but I think there's going to be some limits in terms of how much upside they're going to be able to post on the guidance. I think there's a number of factors there. With their current generation Hopper GPU, we think there are constraints in the China market. China is really pushing the hyperscalers in the China market to use more domestic solutions. There is a China compliant SKU, the H20 in that market, that's probably going to get pushed out a little bit in Q4. Customers obviously are transitioning to Blackwell. Blackwell is their next generation GPU. It's ramping right now. So some of these customers are opting to push out their orders for Hopper in exchange for Blackwell. And then lastly, from a supply chain perspective, we think Nvidia recently made a decision to switch their power management IC vendors. And I think that's creating some near-term bottlenecks from a supply issue, which could limit how many of these new GB200 NVL server racks they could ship in Q4.
So I'm trying to figure out whether we should really game out what could happen with earnings, John, from your point of view, or whether we should look longer term, ignore the noise of this week, and try to figure out where this stock's going to be in 6 months' time.
Yeah, I believe that most investors should look through some of the near-term noise here related to earnings. I think Nvidia still remains extremely well-positioned to grow outsized earnings next year. Our numbers for 2025 are well above consensus. Blackwell represents a pretty significant upgrade cycle because they're going to be shipping much higher ASP server rack solutions versus simply shipping GPU cards.
And I'm seeing here those figures that you're referencing. So again, there are your price targets, 180 on Nvidia right now. What about the rest of the space? I mean, do we even talk about Supermicro?
Supermicro obviously is a customer of Nvidia. We like several of the other AI chip vendors in the space, namely like an AMD and a Marvell. This is still a very expansive space, and more than one vendor stands to benefit from AI chip growth.
Would you kind of delve into some of those? So I don't hate to call them second-tier names, but how much potential upside is there based on what you see happening here into 2025?
Yeah, I mean, I think the AI chip sector stands to grow pretty significantly next year. I think there's going to be three drivers there. Obviously, NVIDIA is one of the key drivers, but we also like AMD because we like them as kind of a primary second source alternative. Like in the history of technology, there's never been a sustained monopoly over time. Customers are always looking for second source alternatives. We think AMD stands to benefit there. And then hyperscalers, companies like AWS and Google are making their own AI chips. And kind of one of the best plays on that opportunity is going to be a company like Marvell.
All right. And before you go, John, what are your parting thoughts on Intel at this juncture?
Yeah, Intel's in a pretty challenging situation, right? They're losing share on a lot of fronts. They just went through a major restructuring, which obviously hit their R&D group, which, they were already kind of challenged to begin with. And then lastly, they are still pretty much a non-factor in the AI space. And that's one of the fastest growing sectors in the chip space today. And without any sort of compelling AI story, it's going to be really tough for them going forward.
And it's sad to see them rotated out of the Dow as they try to sort this all out. John, thanks for joining us today.